All right, hello and welcome, traders. It is Wednesday, January 15th, 2025. New day out there in the markets. Big news coming out from the CPI reports this morning, where inflation came in more than it was the previous month, but in line with expectations. The core dropped a tad, which I think maybe gave some relief. But the fact that we didn't have a hot CPI number today sent the markets much, much, much higher. Huge rally day, big rally in bonds, big rally in the markets. Overall, for our account, a beautiful day today. Probably one of the best single days ever. We're very heavy bonds, and today's move, fantastic. As rates dropped, bonds rose, big gaps ups uh, in ZB, in oil, in bond futures, big gap up in TLT, TNA, everything, or I'm sorry, TMF. Things seem to be pretty nice here for bonds. Are we finding a bottom finally in bonds? I don't know, is yet to be seen, but today certainly a really welcome move by my portfolio, depending on how you look at things. I'm still in bonds pretty well here with some good size. So if we get a decent rally in bonds, is really, really, really going to skyrocket my portfolio because we are heavy in bonds at this point with a variety of different types of trades, naked puts, 112s, strangles, jade lizards, you name it, I've got it. If it's bonds, I'm in it somewhere. Also on the in the stock market too, you know, with rates easing, okay, or with the inflation potentially easing, even though I don't know that today's report was as bullish as everybody thinks it is, but hey, we'll take the market move to the upside. We still ran from 2.7 to 2.9% on the CPI year over year, so we're still going higher, which is not really where we want to be. Some of the core pieces of that as well and again are the maybe it's the core year over year that drops from 3.3 to 3.2, people like that, but the main CPI year over year came in as expected, but it was an increase. So we saw some hints yesterday when PPI came in a little bit light that maybe today is going to get me a decent CPI report. So we did have uh, a call broken wing butterfly on today. We were expecting hopefully a big move, and we did. We made a little over 300% on that trade today. It's trading an SPX broken wing butterfly. So that worked out well. But again, the markets, they're all worked up, worried about inflation, and we got pretty much in line to slightly lower on the core rate today, which absolutely was fantastic. So as I mentioned, you saw bond prices drop. Now, while bond yields drop, while CPI inflation was still 2.9, we're still seeing pretty strong inflation. Car insurance way up. Okay, so car insurance still extraordinarily high. Transportation costs still very, very high. Car repairs, and then utilities, gas, homes. So there's still inflations in really, I think, key sectors that we all need to live. So I don't know that it was as great today as everybody thought, but we'll certainly take it and we'll run with it. Let's take a quick look too at how things have been going with the yields. Share my screen. Let's jump into it. And so uh, here's what things looked like overall today. We'll go to the line chart. I mean, inflation, this is still the third month in a row of increases. So while maybe it was in line with expectations, it's still an increase on CPI year over year. So that doesn't really make me all that comfortable that this market move is going to stick around for any particular point in time. What's going on in tomorrow? Tomorrow we're going to get retail sales. We're going to get unemployment claims as well tomorrow. So we'll see if there's any change in the labor markets heading into things tomorrow. Let's take a look at some of the charts and where we are. All right, so taking a look at the charts, not at all that's been said. Huge update today, 107 points to the upside. Big rally. We finished off of our uh, highs, but this is really what I want to take point your attention to. If we look at this, we have been in this downtrending channel. We hit the bottom of the channel 2 days ago, bounced off of that, had a nice reversal hammer candle, a little bit of follow through yesterday, and then a huge move today. But look, we hit exactly on this on this trend line to the downside today, and we did fail at it a bit. It would not surprise me to see us retrace a chunk of this tomorrow, a third, a half, something along those lines. We could still go higher, but I don't know that we're all out of the woods yet on inflation, but maybe enough right now to keep sending the markets higher. I'm certainly going to take what you're giving me. I have been cautiously bullish. Cautiously bullish. I say it every single night on video, cautiously bullish, right? And until I see a complete sea change in things, okay, we're just going to keep it light and we're going to keep our trades running. We had a fantastic day trading today. We'll cover that with you in a minute. But you do see MACD starting to tick up. RSI is ticking up. Stochastic momentum coming off oversold, moving up. The weekly still looks like down on everything. Maybe this is uh, you know, a nice breakout pattern that we'll get here tomorrow. We did not also flip PSAR from bearish to bullish yet. We came doggone close, but if we get any reversal tomorrow, which I think is very likely, I would be watching the open. If we get an up open, I would probably be shorting the open tomorrow. If we get a down open tomorrow, I think that could be good for the markets. But I really don't want to see a pop or a upward move at the open. That would make me a little bit more nervous on things. But we're well hedged. We've got trades in great shape. Our buying power is in unbelievably great shape. So we'll cover all of that with you. There's the ES E-minis. All right, let's take a quick look at what else got affected today. The US dollar, 3 days in a row down. Really great for Forex, really great for gold, really good for bonds. All of these things are nice to see, but a big reversal off the lows of the session. We'll see if the dollar starts to move its way back higher tomorrow, or do we still keep pulling back or at least moving sideways? If we just stay sideways, I think that would be awesome in here. We'll see how that all plays out for you. If we're looking at the 10-year note, huge drop today. So we had hit all the way up at 4.8 here 2 days ago, and now we're back to 4.6 and change. So pretty good move down. And of course, that's going to push your TLT, your bonds higher. Really nice gap higher today. TLT, TMF, same thing. Nice big gap higher today. So all of those good signs, good things to see. But overall, you're still in a bit of a downtrend here on TMF and everything else that we see here. So until we really have a pretty strong change in direction, I'm going to be a little bit skeptical on that. And if we look at the 30-year bond as well, pretty nice move down. I'll keep TYX and TNX right next to each other. All right, so let's get back in there and let's take a quick look at volatility for the day. VIX, huge move down. So, had been trending up for a couple weeks and then down a bit after PPI, down quite a bit after CPI. A lot of worry came out of the markets today that inflation is not at least rampantly running away to the upside. I'm still telling you, it went up today, even if it's in line with expectations. The year-over-year number did go up. And the core essential CPIs that we watched, the specific categories, they aren't good. So I don't like any of those things that I see, but I will take what the market's going to give me. Trade what you see, not what you think. And you're going to write that down if you don't have it. Trade what you see, not what you think or anyone else thinks. The news is noise. We can use it sometimes to our advantage, but for the most part, you got to watch the price action. That's going to tell you everything because really, in the end, all that matters is the price action that we have. So be aware of what's going on. However, don't trade based upon someone else's opinions, and that's what news is they're reporting potentially facts. That's even debatable, and they're giving their spin on the facts. Okay. What I want you to do is I want you to take a look at the facts, take a look at the market, and then make your own decisions. The fact to me was still that CPI did see an increase year over year. That seems to be getting thrown away. So we'll see what happens overnight. So let's keep going. On this VVIX as well, volatility on the VIX keeps dropping. That's pretty good to see. All right, ES, we've already covered it. Back to the top of this channel, moving lower, or I'm sorry, moving higher. Bounced off of it today, didn't finish higher, but it did break some key moving averages on the session. This could all be good. We'll see what happens if we get some follow through. Oil just continues to power its way higher. This is my problem child. So we go from one thing to the next. We can't just get them all moving the same way. I need bonds rising. I would like ES rising or staying neutral or maybe even falling a bit. And I want like oil to just chill the heck out right here. The sanctions on Russian tankers by the Biden administration, absolutely putting a crimp on there. Supplies and inventories dropping a bit, especially in Europe areas. And then we're also seeing, um, some drop in, like I said, in the supply between all of those. And OPEC did not come out with any type of uh, incrementally larger production, which they may now do at the next meeting. If oil's now going to be at $80, which is ticking up to here, I think you got to pay attention on oil. So right around this $80 mark here, I think that's certainly something to pay attention on. I think the 80s we might stick here. Also, you have a ceasefire between Israel and Hamas, and yet even the Middle East tensions, which should be bearish for oil prices, didn't really affect it, and they kept going up. I think we're overbought. I think we're overdone. You've got RSI way overbought. You've got stochastic momentum overbought. You've got it on the weekly overbought. Essentially, you've got it on the daily overbought. We're above the Bollinger Bands. We're above the 3 ATR line. We're above previous resistance in here. I would expect oil to chill out here. It's had a huge run. Might take a little bit of time, but big up move today. Not great. Didn't kill us, but um, would be nice to see oil just relaxing a little bit. Now, gold, okay, we saw the dollar pulling back a bit. Gold now moving higher. Again, back to a resistance level on gold. It's been in this channel for a while. We're in this symmetrical triangle. The break could be to the upside, or we could maybe just run into some resistance here and start to roll over a bit, being a little bit maybe overdone. But I really still think gold just trends higher and will be a good trade for next year. Any pullbacks in gold for me are an opportunity to get into gold with 112, 111, Jade Lizard, put credit spreads, or just selling naked puts out a bit. I think longer term gold continues to move higher. All right, bonds, fantastic day today. This is what we want to see here. Oversold levels. We've been talking about it for days and weeks as we've moved down, but maybe we found some support in this area and we start to move higher. There is so much overhead resistance here that I don't expect big rallies in bonds. All I want to see is some basing out, and maybe that's what we're getting. MACD's reversing, the RSI is moving higher, stochastic momentum oversold and starting to tick up. I am liking where bonds are in here. So I'm not going to go through too many other things. We'll take a quick look at the Aussie dollar back to this trend line with the US dollar dropping. This looks like a decent play, or at least a potential bottoming area here. We might be able to start getting back into some strangles sooner than later. And then RTY, so you're looking at the Russell, small caps, we didn't break anything to the upside today. Things can still go, I think, extraordinarily bad on things. So I'm going to be bullish but cautious. I'm not getting into anything new that's going to be a strictly all-out bullish trade. I want to give myself some downside hedge. The 112 is the absolute perfect trade for that. You can also use a Jade Lizard on some stocks or some areas as well. Very similar style trade, but I think that whole bear trap trade where no risk to the upside, big trap where we are, or a little bit to the downside, we play for a neutral to slightly bearish move, and if we get a continued rally, we have no worries. I tried to get a trade on today. I didn't get filled. I'll show you that trade in just a bit on ES, but you can do it on pretty much any of the S&P uh, names: SPY, SPX, ES, MES. I did it in the small account today as well, so we'll share with you exactly what we did in the small account on the day. All right, so there's the markets. Let's take a look at the accounts quickly, and then we'll get into some trades. Look at the portfolio, and we'll try to get you out of here in a reasonable time today. Just go quickly over the accounts. Well, here is the main income navigator portfolio. This is fantastic stuff in here. Delta dropped. We got rid of several trades today, so we were actually able to close a handful. We'll talk about that in just a moment, what we closed. But we got Delta, 218, pretty flat. Our theta, very low. We actually closed out of some trades today, removing some theta. We had a big, nice $9,000 increase in that lick. We're at the highs of the year right now. We are up over 3% right now on the year in 2 weeks so far, but I'm not really as worried about net lick as I am more of my realized gains. And losses, BP also dropped almost in half today. I got rid of a fairly, I felt, high risk position a tad earlier than I normally would on a 112, just to remove the risk of a reversal tomorrow, which is something I think we could potentially see. But look at our buying power now, down to like 30% buying power on the day. The $11,000 today in realized gains, while that's all nice and good, and it's 17,000 for the month, the 11,000 today is a little bit, well, it's accurate, but it's a little bit misleading because some of that were hedges that we actually closed the short puts on hedges and rolled them on our volatility hedges. So we took profits closing the short puts of volatility hedges, but then we bought more longs and sold some new shorts as well. But the profits that we booked were obviously from the short puts. Those will be offset when the long puts start to expire at the end of this month. So we'll have several long puts come off, which will offset some of those gains. But certainly looks nice. But I just want to make sure you understand where things are coming from. We're up almost 5% in realized gains for the year. So far, let's take a look at what we closed. And here's what we did today. So a lot of stuff happening. First one was this SPX call butterfly. We put this on a little bit after 3 o'clock yesterday, and we managed to book a 315% increase here, made $1,100 on a $495 trade. So pretty nice here, booking $1,100. I did remove a naked call earlier today for an $80 loss. That removed some buying power concerns because I felt that oil was overdone, but that I had essentially the naked call was on because I had naked puts. Well, I took those naked puts off as part of a 112 trade, so they were just strictly naked by themselves, hurting me on buying power and not looking beautiful, but only down $80. So I thought, you know what, why not take those off today and free up a ton of buying, like $1,700 in buying power. So it cost me $80 to free up $1,700 in buying power. All right. So we also had a hedge that we rolled today. So one of our volatility hedges we rolled, we took in 4,900 and another volatility hedge for 2,400. Those will be offset by puts expiring, hopefully worthless at the end of the month, or some puts at least expire worthless at the end of the month. You want your hedges expiring worthless. You want to technically either be losing money a tad or at least bringing even, or do you want to be making money because that's not going to help you hedge wise. Okay, there's no hedge that gives you a credit. All right. And then the last thing here on the 112C, normally I close these things at 90%. So I just closed one at 90% the other day. took in 4 grand. Well, today I took in 2680. Still not bad. We'll take the 2680. It's more than we anticipate for the month on the sizing that we have on our strategy builder. But I closed it at 81 as opposed to waiting until 90%. The difference is $300. So for $300 in lost income, which I more than made up for with the $1,100 on this SPX, I removed probably the most risky option in my portfolio, which was a $5,700 strike, 4 naked puts at that. Uh, the move today is certainly helpful, gave me a chance to get out of that trade. That alone freed up almost $33,000 in margin. So we freed up on the day almost $70,000 in margin. So when I show you this 241 to 121, that's pretty much it. I mean, we freed up like 70 some thousand just on a few of those trades alone, not to mention the types of trades that we added. So good stuff here. We just keep managing the portfolio. Things are going well. I think we're hedged great. Did a very in-depth uh, kind of review of my hedges with our Discord members today, showing where we are. Now, I removed a boatload of my risk, so I have almost, I shouldn't say no risk in the portfolio. There's a little bit of risk in there, but for the most part, uh, my ratio of naked puts to my put debit spreads using the calendar 112, that's fantastic. Right now, I only have 2 naked puts. When we look at these trades and we're looking down here, we only have 2 naked puts, and then we have 8 put debit spreads. So 2 tranches of 4. So essentially, that's 8 naked puts. Okay. And then we have all of these put debit spreads, which is 21 put debit spreads. So 8 naked puts, 21 tranches of 100 wide put debit spreads. That's covering our accounts pretty well. It's giving us probably 30% protection on a giant down move or a volatility spike. These will come into play initially and pay for a lot of that drawdown that could potentially happen. I'll cover about 30% of my account there. And then my volatility hedges, which I have down below here, all of those that we're doing the kind of the regenerating version where we keep closing and adding more. And then I've added some other Black Swan 5-3 ratio hedges there. I only have one of those on right now, but those are now covering really the rest of it. Not only will that keep our buying power from being hampered if we have a drawdown or a spike in volatility, it's also going to help pay off. So actually, both the Delta and a Vega hedge. So we're in good shape. Love our situation right now. Man, we need to get some trades on now that we've got some buying power. I would love to see the market just tip over and start falling tomorrow. So, and again, I think if we're decently higher at the open, I would like to see us move lower, but I really want the market to keep dropping. I was hoping it would just keep dropping so we can get more traps playing, paying some money off of those, and we get on our lazy trader portfolio. We want stocks dropping so that we can keep adding more because we know over time things should go up. We're sitting at decent positive delta today. Most of these are long trades in here. Most of these are income plays, so we have a decent amount of theta. I'd like to have more theta in this account than I do currently, but we offset some of that when we buy options as well. So we're long options and we're selling calls against them in some cases, so that does offset some of that. Net lick jumped up almost 20 grand today, so 17, 18 grand. We went up from 345 to 362. We are at new all-time highs in this account. So this account is running at highs, and our BP usage dropped a little bit today. We didn't close anything. There was no need to close anything. We're sitting at 67% buying power. There's no futures in this account. It's strictly all ETFs and a few high-quality stock names. We can touch base on those if you want, but we didn't close anything. This trade's in great shape right now. All right, and then on the small portfolio, And a nice update today here as well. We're just off the all-time highs from earlier uh, in the year, but we're doggone close to them. And we hopefully will be back there shortly. Delta's 0.26%, totally fine. Theta 30 here for 0.16. Not bad. Would like to see a little bit more theta in this account, but we do a lot more poor man's covered calls here, so it's really hard to generate more theta. So it's a little bit misleading in this account. The theta is not my main thing because I'm not just only selling premium. And then buying power popped up just a tad today, and we booked another 60 bucks today. We did close uh, on a poor man's covered call. We did close the covered call on our CMG trades. So we've now booked 291 bucks this month so far. We're halfway through the month. We're up 1.3% on realized gains for the month. So overall, pretty good. I like where we are. Let's just take a look at our accounts, and then I'll let you guys go. I always like to share my accounts when I can with you, just to give you a sense of what I'm trading, being very transparent. Okay, you don't have to do anything I say. You can follow along, you can laugh, you can make fun of it, okay, or you can potentially just use the opportunity to learn, is he doing something that maybe I could do, or maybe I can do better? Okay. I just want to give you some ideas, but I'm sharing what I do because it keeps me accountable to myself as well as everybody else out there. I share my wins. I've shared my losses. You guys have all seen losses. Okay. You've seen my wins, very transparent on everything that I do. Just here to try to learn, get better, and grow my account. And if I can help you at all, great. All right. Let's take a quick look at oil. Our oil trades down a bit today. We're sitting on a strangle, which is a little bit red, a couple $100, no big deal. 112, very green, up 68%. Great. And then we have, again, a naked call that's tied to this naked put of that strangle a bit. Oh, I'm sorry, this 112, not the strangle. Uh, and doesn't cost me a ton in the buying power area, but it is obviously impacting the portfolio. We're down a bit in that right now. We'll monitor that thing and we'll trade it as we need to. ES, we got a lot of stuff going on, but we've got some things coming off. So as much as they didn't get used, I have an FB112 PDS that's going to fall off in 2 days. Fine. It was there. It was a 500 wide. It didn't come into play, which is actually good. We have the last standard 111 trade that we were doing. That's falling off. Everything else will be pure 112 calendarized trades. You saw that I already closed a naked put today. I've got a 30-day hedge just sitting out there. It's meant to die. So I'm not worried about anything with that. We do have vol hedges all over the place here. One was an old fly hedge. I don't do that. I don't like that trade anymore. That was a trade we put on 133 days ago. We've since modified uh, our vol hedges a couple times since then. We keep improving on uh, some of these old versions of it. But you can see there's several vol hedges out here. They're all paid for. But we booked profits by closing the shorts. And then when these start to come off, you can see, we'll take a $5,000 hit here. We'll take a $4,000 hit here. So that'll kind of offset some of that money from today that we took in. All right. But in the end, they will all wash out or net out to about zero in the end. So we've got a Jade Lizard we're sitting on. This thing's up 1,600 bucks. Love the Jade Lizard in ES right here. I think these types of trades really pan out pretty nicely. And you can see how this one's shaping up. I love the Jade Lizard type of trade. We also did the same thing in a 111 version. And I tried to get a new one on today, couldn't do it. But we're selling the call, credit spread up here. We're in the trap. This trap's going to pay $3,000 if we expire in this trap. If we blow through it, we're still going to make 600 bucks, which is a nice return for us. Right now, we've recouped about half of that $3,100. So that's the goal right now. If we just let this thing sit, hopefully the markets just maintain and chill a bit here. And this trade should continue to improve. All right. And then we do have a 111, an at the money 111. So it's an ATM 111. Name them whatever you want. Still pretty much a bear trap style trade, but there's a 111 version, but it looks just like a Jade Lizard, except I'm using puts instead of calls on ES, and there was a reason for that trade here. But if we stay in this area, and we're right at the top. I mean, if we go up, if we blow through it, we make 645 bucks. Okay, I'm totally fine making $600 on this trade. But if we stay here or even sell off a little bit, even 5, 10, 5% or so, even almost 10% down, we can handle 10% down and still make a little over $2,000. So that'll start to pay if we stay here or don't move up. So I think these are great little add-on trades that we've been doing. And then you can see we have all of our 112 trades on. Here's our naked put. Right now, there's only two naked puts on in this account. Where's the other one here? Right here. So there's only this one and this one. There's only two because I closed the third today. So we really don't have a lot of risk exposure. We only have two trades. This one's at 4,900. I like it. It's up 50% now in 2 days. Okay. And then this one's up 25% in 40 days. Big difference depending on when you enter. But then we have all these put debit spreads, put debit spreads, put debit spread, put debit spread, put debit spread, put debit spread. So these put debit spreads are in good shape. I've got a ratio hedge on here. I love this trade. It doesn't pay a ton of money if the market drops or volatility rises. It'll help give you some relief, maybe $9,000 in an extreme sell-off or extreme vol push. It will pay. It's not going to hurt you at all. Really, the only way it could hurt is if you grind down to 2,900 in 120 days. Okay, and you now start to head into the valley of death on the ratio spread. I don't plan on letting it get there. I will take these shorts off at about 90% winners here, which will leave me with probably 30 to 45 days worth of 20 longs. And I plan on doing that about every 2 weeks. So it's another nice little hedge that doesn't really cost you anything to do. Maybe cost you a couple $100 here, but I'm totally fine with that. All right, gold, we're sitting on a Jade Lizard. That thing's up 490 bucks, 40% in just 13 days. I like these trades in here. We might be able to get I looked at another one today. Let's see what happens with gold before we jump in. And then bonds, we've got a reverse Jade Lizard that we put on. That thing's up nicely, 38%, 375 bucks. Not a big trade, just a nice little trade. But what can we do with this particular trade? It's worth $1,000 to us. So we sold it for $1,000. We've already made 375. We just sit here, and as long as we stay above 105 and below 126 on ZB, this thing's going to pay off $1,000. I'll probably take profits around 90% on that. Then we get a strangle here. It's down, or it's up, I should say. It was down a little bit today, but it's up fractionally. Nothing wrong with that. Nothing to do there. And there's another strangle here. It's down 800 bucks. Nothing to do with that right now. And then we have our SPY leap put campaigns in this account. They're all doing nicely right now. So we've got 3 campaigns going in this account. So there's that particular account. Let's take a look at the Lazy Trader account, which had a really nice day today. And here's where we are on the Lazy Trader account. Long Google naked puts, long IWM naked puts, long Meta naked puts, all doing great. NVIDIA long naked puts, and a Jade Lizard in here. This Jade Lizard isn't meant to make a ton of money, but 550 bucks or so is a nice little gain. We'll see if we can get there on NVIDIA. If not, okay, I really was in it for the puts, the 105 puts. I would be more than happy to take assignment of 2 puts on this thing. So that was really the reason for that trade. Put the Jade Lizard on. If you get assigned, then you start to do reverse Jade Lizards to wheel your way out of it. All right, QQQ. We're sitting on some 112s, very nicely profitable on both of those. SPY, We do have another Jade Lizard in here, so it's Jade Lizard mania right now. But to me, the Jade Lizard is the best trade. It's either that or an at the money 112, same exact type of trade, or an in the money 112. Either either trade setup or 111. Either of those trade setups work great in a neutral to slightly bearish market right now. I said I'm bullish, but I'm cautiously bullish. I think cautiously bullish and mildly bearish are so similar that, hey, all it takes right now is for us to be just neutral, a little bullish or a little bearish. Either way, we make a ton of money in the trap on these strangle type of trades. All right. I've also got a new 46 DTE Jade Lizard. It's up now 24% in 2 days. That could generate another 500 bucks in cash. Then we've got put credit spreads in SPY in here that we were doing a little bit of an experiment. And then here's the remainder of the SPY leaps. I moved them from this account into the Income Navigator trading account. So as these come off, I'll be done with that here, and I'll be redeploying that money in other ways. And other ways will be more SPY, more QQQ, building the base, and more TNA, again, building the base, and then more of the Google's, Meta, NVIDIA's, those types of trades. Primarily Google and NVIDIA. Meta's just in here right now as a trade. I don't love Meta like I like some of the others, but it's certainly paying off. All right, and the last piece here is Bitcoin. Taking a look at Bitcoin, I know this is going long, so let me wrap it up for you here. We are selling at the money covered calls in here. What you can see on the day is everybody worries about, oh, look, Tom, you're taking a big loss on this. Well, no, because I made more money on the long calls than I lost on these calls. Okay. I netted $6 on the whole day here. So all told, it's pretty nice. I've already been closing these for wins. So I'm happy to take a loss here. I'm taking the premium out. There's only 22 bucks of premium left in this trade, okay, out of the 176 we started with. So most likely I'll just close this thing in a day or two and we'll write something else at the money. If Bitcoin falls, okay, we make even more, but we protect our long calls. And if Bitcoin rises, we just keep getting paid the intrinsic premium as our long calls rise. Okay, all and so it's not a net. Essentially, this will actually give us a net gain overall because I will be taking the extrinsic value totally out of the call. So I like these in a neutral, maybe even a little bit bearish environment. Maybe that's not what we are in anymore. So maybe the next one I sell will be a little bit more out of the money. If I think Bitcoin now is on a bit of a run, I really kind of feel Bitcoin may drop back a bit before it makes its big run into the end of the year. All right. Lastly, we can touch base on this small account. Here's what we're trading in here. We are on Bitcoin. Now, this one's a little bit more out of the money, uh, but this trade's been doing great. So we're just generating cash there. There's that Chipotle trade that we closed today, the covered call. I opened a new covered call on there. We're doing NVIDIA poor man's covered calls as well. These have been paying off nicely while NVIDIA has been dropping a tad. I'm fine with it. We have a long way to go on this trade to generate some cash. And then we're also sitting on an at the money 111. This is the trade that I was trying to put on an ES in the other account. I'll probably still try to do this, but this is what this trade looks like for you. Okay, so we can get it all situated. Here's what this trade looks like. Here's we're basically at the money with this put debit spread. We moved a little bit out of it here, but all the market has to do is it stays here. We make $100, which for a small account and MES, this is great. We didn't use a ton of buying power to do that. In fact, this trade used $700 in buying power. So we're going to make 100 on 772, which is 13%. So if we stay up here in the tail, we make 13% on this trade in 65 days. If we stay neutral to a little bit bearish, all the way down to 5,200, more than 10% down. But if we drop 5, 6, 7, 8, 9, 10%, we're going to make $350 on 772, which is basically a 50% return. So this is why I like these trades right now. I think they're going to pay off nicely for us. And then we're also doing naked puts, calendarized naked puts in this account. And then we also have the 120-day naked puts in this account, which are doing great. So there's where we are on the small account, doing great. Buying power's fantastic on all of these. Uh, we're well below 50% on the futures accounts, and we're obviously over 50%, but that account is okay, no futures. It's just using portfolio margin. So I think we're in great shape. Love the setup. Love where we are. I hope you guys got a lot of value out of this today. If you did, go ahead and click that like button down below there. Let me know that you like this video, you got something out of it, and it pays off for you. And all you need is one or two ideas of something to do and then make your own trade. You don't have to follow mine, just make your own trade. See what we're doing, get some ideas, formulate your own plan, but you got to have a trading plan to be successful. All right, take care. Stay safe, everybody. We'll see you later. Bye bye.